Look out.
Wow. Crazy.
Heidi ho, everyone, and thank you, Mai, and thank you, Ainslie, for having a nice little pre-show chat. It's wonderful to have everyone on board, as always, and I hope you enjoy this edition of Weekly Market Update. We'll be doing the usual things. We'll be talking macros in a minute with Julian. We'll be going right through the entire staff just about and talking about different aspects of different asset classes and different ways to look at the markets that we do each and every week. We've had an interesting week where gold's put in nothing. It's just put in a doji pretty much. Oil dipped a little bit. The S&P put in a new high on Monday and then had a little bit of a dipsy doodle and then a bit of a rally as the week progressed. We've had a hot US dollar. There's no question about that. And I pay particular attention to market sentiment somewhat. And I'm just a little bit on the market sentiment that tells me that the market is in risk off mode. And I know the next person doesn't like me talking about risk off or doesn't like that term, but I'd love to hear what his market overview is today, because it appears to me that the market is suggesting that this inflation thing is real, and I'm just not convinced that I know either way, frankly. So I'm pretty much in the dark, and I'd love to be enlightened on whether it is really the real deal coming up or whether we're still in transitory mode. I know I sort of touched on that as we concluded the show last week. Julian, welcome to you. Your thoughts, mates, on what the market is and how we're handling the macro scenes.
So thank you, Geoff. Hey, look, guys and girls out there who are trading at the moment. I think August, to me, I don't recall many traders in the world saying August was the best month I've ever had. This is a month of being nimble, of being trading in a reasonable trading size, and having usually a lack of clarity about where the world is going, because you end up with conflicting signals before the autumn starts in the Northern Hemisphere and people come back from holidays and start to report on what they think ought to be happening within their organizations. So I think one of the challenges we have is that you get subjected to a whole series of news reports which can be confusing. And yes, to Geoff's point, you know, the debate, and I was talking about this last week on my macro overview, is inflation transitory or is it secular? Because that sort of means something completely different, right? So transitory means the big rallies we've seen in commodities is basically over. That's it. And we're into a more deflationary environment from here on in, and the whole world is going to go into a 1% inflation. And what is the evidence out there for any of this secular inflation? Because this happens, if you look at the Japanese economy, this has happened 5 or 6 times over the last 30 years, and nothing has happened eventually. All you do is fall back into deflation. And the reason why I mentioned Japan, of course, is because if you look at their figures, they restated a number of their inflation figures this year, which actually showed that Japan even now is suffering from deflation. That's not a lack of inflation, that's actually negative pricing, right? And it hasn't seemed to have got much better over the course of the last few months. They're also quite worried about what's going on in China. Not from a geopolitical standpoint, purely economic, right? Because what's going on in China at the moment is, as well as a government crackdown on the education companies and some other large organizations, which is as much to do with a reorganization of the way they're thinking about the world. And I don't mean that in a negative way. They're trying to get away from having a one-shot examination system which everybody crams for, and go into a more generic, we need a wider skill-based set of examination things. And that's created a lot of fuss and bother in the high-tech world in China, and they're going to have to sort of figure that out. On top of that, the economy is slowing down, and they never put stimulus in the same way that the Americans or the Europeans or the Japanese even have done so. So they're now suffering and seeing an economy slow down, and that economy slowdown seems to be beginning to accelerate. The numbers the last couple of weeks were a bit rubbish, and if you like, the economic surprises have been to the downside. So at the same time, we have a US stock market making new highs. We have amazing confidence by just about everybody in the world, is certainly in the G7 or G8, about what is going on in asset markets globally. And so the picture is confusing, and I think that's perfectly understandable. So when you get these sort of things happening, and believe it or not, guys, the reason why I'm highlighting the transitory inflationary elements is I'm falling into that category. I'm a monetary economist by training. Okay, so for me and Vienna, I love Vienna an awful lot. Why do I love Vienna? It's a fantastic city, but it's also the home of the Austrian School of Economics. Well, together with Chicago, you can argue as well too. But the point here is that the Austrian School of Economics is about monetary economics. And the reason why I quite like that is because you need to look beyond the shores of the United States to find out what's happening to US dollars. Yes, the US dollars on the shore in the United States are accelerating at a 5% inflation rate, but elsewhere that is not the case, right? And the euro dollar market, right, the offshore dollar market is in severe decline. Okay, so that doesn't fill me with thoughts of secular inflation. Okay, anyway. Enough on that, because sometimes we could sit here and talk for an hour on that. I've got 2 more minutes, right? So what do we need to focus on right now? We focus on what's happening in the technicals. That's why things are important. Ainslie will talk about gold, I think, and I'm sort of with her on that. What I will mention is what I mentioned last week, right? So is gold at a technical juncture, right, for the long term? What do I mean by that? I mean that if you believe in inflation, right, if you're an inflationista out there, okay, and you've read all these reports and you think that inflation is the right place for the world to be, then you should be buying gold. Why should I be saying that? Well, because gold will most likely appreciate dramatically over the course of the next 5 to 10 years, because we know inflation is going to be very high. So gold is an obvious beneficiary of that, as it maintains its purchasing power, you know, as the US dollar depreciates, if you like, or as inflation rises. So consequent to that, right, where is a good value to buy gold? Well, do you know what? It doesn't really matter, because if it's 1,800 today or if it's 1,500 tomorrow, does that matter? Because you know it's going to 5,000, right? Your asymmetry is intact. If, however, you're more short term and you think in a more of a trading perspective, then you've got to do something different. Ainslie will clear that up with you later on about where she thinks the market's going. So listen to that and see what she's saying about the short term technical picture. But this is the challenge that we all face, right? And this is the same in oil. As oil comes back and we see oil in the low 60s, hitting all the support points, coming in to form double bottoms and all those things that technically look like it should consolidate, right? Here's your moment. Right? Do you trade technically short term, or do you trade longer term when you believe that maybe if inflation is secular, the world is going to inflate very quickly, oil is going to go to $150 or $200 as part of that journey? Why shouldn't it? Okay, because after all, we're not drilling oil wells anymore, are we? We're not investing in that sector anymore, but the demand is going to still rise for oil. Well, there's a logical conclusion over the course of 4, 5 or 6 or 10 years, right? That's how you have to think about it. Okay, so then there's something to ask yourself, right? So what is the picture? Well, I always keep coming back to the technicals, right? It always comes back to the market. Whether I'm a long-term inflationista, whether I'm Mr. Transitory, right? Either of those things doesn't matter. The next stopping point is how you're going to put the trade on. And how are you going to put the trade on? You're going to look at those technical pictures and try and establish what for you is the right place to establish a trade in your particular direction that you favor. If you're an inflationista, you're looking at a buy point, right? If you're a transitory dude, you're looking at a sell point. What does that mean? Well, that means as the market bounces over the course of the next few days, as a transitory guy, I might be looking for sells. If you're an inflationista, you'd be looking at this going, I am going to look at support points because that's going to be where I'm going to establish my longs. Now, you're going to also say to me, Julian, why should I look at it from one or the other? Because I can't quite make my mind up. Well, here's the thing, right? When you can make your mind up about what you believe is going to happen, that gives you something that traders have in very short supply from time to time, which is something called confidence. Okay, the more confident you have, right, then the more ability you have to take the positions that you need to when the time comes. Because sometimes as traders, unless we're purely trading, systematically, right? We get out there and we say, no, I'm following every single rule I've got in every single market I'm looking at. Sometimes we take a discretionary element and we say, I believe that. The minute you put the I believe that into it, you have to back that up with a technical picture, and then you have the opportunity. If you are right, you will make more money than you would normally make out of that trade. And it doesn't become a trade anymore. It becomes a strategic view if you're getting it right. Okay, so here's the lesson of the day. The lesson of the day is look at the technicals for your timing. We go through this every time when I try and talk about the way that I look for market setup, the way that I look for the trigger, and then when I think about risk management, right? Let's cap the risk management for the time being. If we believe that we're an inflationist, we got to use those technical pictures to establish the trade to give us the right leverage at the right point in time in order for us to make as much money as we can and take advantage of the opportunity, right? And if you're a transitory dude, same thing applies, but you might have the opposite view. That's the conversation for today, Geoff. I'm pretty much done. I think I'm as confused as everybody is at the moment. I'm on the side of transitory because in my blood, I feel as a monetary economist, that's the way we're going to go, but not a monetary economist in the very narrow sense. I'm an international monetary economist. I don't see the money supply around the world and the bank balance sheets around the world growing. What I see is stability and I see decline. I'm looking at another Japan. Now, how does that feed in? Well, that's going to be the great question. That's the $64 million question we like to ask these days of ourselves, right? But I don't do anything without a technical picture backing it up. Geoff, over to you.
Mate, love that technical picture. That's always good. And thank you very much for introducing us to the Spanish economist today, the inflationista. I think that's a good one.
I've got nothing.
I'm sure you have, but it's probably not printable or even broadcast. Thank you so much, mate. Really appreciate it. We'll catch you next week, right?
Okay, cheers.
Okie dokie. We normally turn to the the fundamental charts, but as you just heard from Julian, we should be looking at the technicals at the moment. So that's not why we're not talking fundamentals today. It's because we don't have Lexi with us, unfortunately, but she'll be back with us next week, I believe. What we are going to talk about...
Actually, Geoff, can I intervene for 2 seconds? Because
of course
Lewis has asked a question. Can I respond to Lewis's question?
Look, we will give him one.
Wants to respond to that. I'll tell you what, I'll leave Ainslie to respond to that, actually. Sorry, guys. Lewis, it's a really good question. It's about the sentiment cycle and gold. Really interesting. I'll let Ainslie cover that one.
Well, you go for it. Go for it.
Okay, well, if it was me, right? So when you think about the sentiment cycle, what you need to do is to imagine it in terms of 3 major waves, right? You have the first break from the high, because I assume we're looking at the downside and then the bounce and then where we go from there to get to the upside again, right? So you look at the high, you then look and say, can I see wave 1 where it breaks some technical targets, right? Then can I see wave 2, right? Now, what wave 2 forms is like a panic. Okay, a panic. And then wave 3 is the final discouragement point, okay, whereby everybody says, there's no way I'm buying that ever again. And do you know why? I've lost so much money on it. I'm not going to look at that market again. That's what happened to the Nikkei in the early 2000s when it went from 42,000 in 19 something or other down to 8,000, right, about 15 years later. Okay, so let's look at gold, right? Is gold telling us that message? I think gold is being boring. Is it? If you look at the weekly chart or the monthly chart in gold, I don't see the sentiments. Oh, thank you. If somebody's there and they can put it up, right? I don't see the sentiment cycle. I don't see the 3 waves. Find me the panic point in gold and find me the discouragement point in gold. I don't think we're there yet. If you believe gold is going down, I don't see people, the press or people talking about saying, I'm never going to buy gold ever again. What I see is people saying, for the long run, it looks like a good investment. For the short run, I'm not quite sure what to do. That isn't, for me, the right point in the sentiment cycle. I hope that helps you in your analysis. And yeah, if we look back at 2011, 2013, I'm pretty sure we maybe can see that type of breaking pattern. Can I just say, I'll just reiterate at this point that the 11 to 13 period, right, they came off a massive high in the oil market. Commodities were out of favor. there was nothing but I'm never investing in this space ever again. So the reason why I believe it's different this time, if I'm allowed to draw that it's different this time moment, is as things stand today, right? Nobody is in that camp. Everybody believes in the secular commodity cycle. Everybody believes that you can't, that you should be owning this stuff for the long term. There is no willingness at the moment to concede. The market has panicked them out or discouraged them out of their position. So if, to your point, we are the early stage of the sentiment cycle, which is a potential possibility, right? I need to see more negative headlines, right? And we need to get people out of their positions. None of that will happen unless gold gets back down to the cost price at 1,100, right? At that point, then I can see people will give up and then go away and say, I'm never buying gold ever again. And then your case is well made. As things stand today, I think we have a different environment. I'm not seeing that. I would put us at the point of buy the big dip moment, having had the run up from 2011, the fall from 2011, the bottoming through to 2018. We've had the beginning of the wall of worry trade, and we're now come back into the buy the big dip moment, right? Where you go, actually, this is the opportunity of a lifetime before we go on to another high. So I don't see it as a negative part in the sentiment cycle. I see it a slightly different way when I'm looking at those monthly and those weekly charts. But still an awesome question, Lewis. Thank you very much for raising it. And it's really important to go through some of these things. I encourage everybody to put the sentiment cycle as an overlay on that. You will see when you do that, and thank you guys for sharing that chart up there. You will see when we do that, how you can construct that aversion point trade as the market starts to rally from the lows. We have those higher lows. You can see where that is on the chart pattern, right? Exactly right. Thank you very much for the moving cursor. That isn't me doing it. It's pure magic. I've got both my hands free. So I view it, I see the market slightly differently. Lewis, awesome question. Thanks, guys.
Thank you, mate. You can go and have a cup of tea now, I think. That would be a good idea. It's getting late in New Zealand, and I assume it's windy and wet and all of those things that